Thanks, David, and appreciate the opportunity to speak to the audience today. I thought I'd take advantage of the fact that we had our AGM earlier this week, and I thought I'd quickly run through the presentation from that deck. And then obviously there's some people on this call who are perhaps not totally familiar with what Pointerra does. So I'll dive back into the past. But to start, the background on Pointerra. We're a software as a service company, a technology company. We generate recurring subscription income, and we've got a business model that I'd characterize as high growth, high margin, and somewhat unique. And importantly, in terms of our ambitions, is globally scalable with few geographic barriers, apart from getting sales and BD people on the ground in markets we choose to enter. Our business model is somewhat unique. We've got a lot of those moat characteristics that the analysts look for in creating that sustainable competitive advantage as you grow a business and people start to take notice of what you're doing and want to see if they can have a me too experience. And we've got a lot of IP protection that we think assists in maintaining our sustainable competitive advantage. So our story is really about sales growth and the journey this year in particular through COVID, and how COVID's actually accelerated sales, and we express that through ACV. Or annual contract value. So 2020 in review was really about delivering on plan. We grew our headcount, we grew the development of our platform, and a lot of that's customer led. I think the critical success factor for us in the past 12 to 24 months has been deep engagement with our earlier customers, who've very much been telling us what problems they've got with 3D data and how we can help them solve those problems. We've obviously generated some healthy growth, ACV growth, nearly 200% sort of year on year. And during this calendar year, we had a quarter where we were cash flow positive, and for the last couple of quarters, we've been able to say that we are profitable on an ACV run rate basis. So that's a bit of an overview, but we'll do a deeper dive. So if you can move on, David. For people new to the story, this story began back in 2013 when a bunch of software engineers and mathematicians and physicists were let go from Rio back when iron ore tanked. And set about trying to find a technology solution or build a technology solution for one of the problems that they were grappling with in supporting Rio's iron ore operations here in Western Australia, and that was managing 3D data. And I met those guys in 2015, and along with a couple of the Nearmap founders, and we conceived this business model around software as a service, which we've obviously refined into a few different income streams, being data processing, data as a service, and analytics as a service. And so we entered the ASX space in the back of middle of 2016, calendar 2016, and really our story since has been about kind of doing what we said we'd do. But as anyone on the call or anyone in life who has tried to do something that no one's really done before, the path is never straight. But pleasingly, we made some significant decisions back in 2018 to establish a US presence and hired US people, and really effectively, not only did we start up an Australian business, but we also started a US business from scratch. And of course, COVID came along and surprised everyone. We had boots on the ground, and certainly the last 6 months in the US has seen a real exponential growth in the take up of our platform, as being able to remotely manage an asset, a thing you care about, whether it's a road or an iron ore mine or an oil and gas facility or a power utility network. When you're physically distanced from that asset, and then as teams you're broken up and you're working from home, to be able to have access to that asset in a digital sense through a web browser delivered solution is really compelling. And we've got I guess our business is twofold. It's about continuing to enhance our product set, our solution set, to support the needs of our customers and the problems that our customers have. And that's we have this fantastic feedback loop with our customers in different segments, where they're constantly challenging us and saying, hey, we've been using 3D data to solve a bunch of problems, but the workflow around managing that 3D data and using it to solve those problems is problematic. And so, I think if there's a takeaway for people here, we haven't people have been using 3D data for 20 years in asset management, but the workflow is painful and it's time consuming and it's costly and it's inefficient and it's error prone. And by taking our IP and putting it in the cloud and allowing people to stick data in and get an answer out, we squash that workflow. We save our customers tons of time and money. We reduce error. We increase quality, and that really drives our ability to commercialize and sell access to our platform at margins that for us, as we scale up from sort of $5 million US recurring revenue to 50 mil, will be incredibly profitable. Thanks, David. So in just a quick recap for 2020, and then I'll jump into a bit of a deeper explanation about what it is we actually do and some real life examples. As I said at the start of the presentation, our growth in revenue that allowed us to have that cash flow positive quarter, that allowed us to continue to say that we're profitable on an ACV run rate basis, was really a result of solution development, existing customers growing their spend, and we really don't have a lot of churn. So we have this wonderful relationship with customers who might start spending $200 a month or $500 a month with us, and a year or two later, some of them are spending 10, 20, 30,000 US dollars a month. So we have customers who pay us as little as $200 a month and as much as 50 to 80,000 US a month, and that subscription income is really highly valued by the capital markets. In terms of the customer focus, the utility sector in the US continues to lead the way. The utilities are, when we talk about utilities, we mean poles and wire networks. So the companies, and a lot of them are privatized these days, that deliver energy to your house. Those people spend tens of millions of dollars a year generating 3D data to use to then interrogate that data to ask questions about their network in relation to performance and safety and network reliability. And so again, what we've helped those people do is shrink the time from data acquisition to getting the answer. And that's all that, if you really want to simplify what's quite a complex technology, we shrink workflow, and shrinking workflow creates value, and that value is expressed in how we're able to price our platform. Certainly, I said at the start of this little presentation, David, or back up a bit, mate. Sorry. That we, our story is about sales growth expressed through ACV, and whilst we are a technology solution and we're fully cloud deployed, people still buy from people. So how do we get from 5 million US ACV to 50 million US ACV? Well, we do that by hiring salespeople, BD people who have deep domain experience in the different sectors we're looking to grow into, and I can't stress enough how important it is that those people are high quality, have that domain knowledge, are mature, because when you're running a virtual business, and we are a virtual business, I think we have 20 odd people in about 9 or 10 states across Australia and the US. There's only one office, and that's in Subiaco, where part of our dev team work, but we are very much a physically disaggregated business. And obviously when COVID came along, for us, that was situation normal, because we've been working through digital communication means like Zoom for many years. But so, if you're trying to grow a business, and I've hired 7 or 8 people in the US this year who I've not yet met, and obviously I used to do a fair bit of travel to the US, you need to be able to rely on those people to represent your business, to sell effectively, to deal with knockbacks. And this is remove the technology. Moving Pointerra from 5 million to 50 million ACV is about revenue growth, and revenue growth comes through people, and it's driven and reinforced by that deep engagement we have with our customers. Thanks, David. So just a quick recap: how do we make money? I've talked about revenue and customers, but people pay us to host their data, their 3D data. And that once we host their data, there's an enormous amount of trust. Some organizations, some of our utility customers spend tens of millions of dollars a year acquiring this data, and they're doing it because they want to get insight from it. And once they entrust us with that data in our cloud platform, and we integrate into their workflow, and we integrate into their other enterprise applications, they also then figure out that they can pay us to solve more problems. So we might process their raw data for them, instead of it going off to places like India and the Philippines to to try and save $1. And to the right of the story from hosting data is analytics. At the end of the day, people spend money on data not because they want the data. They spend money on the data because they want the answer. So for us, Insight, analytics as a service, and we'll get to 3D Insight at the back end of this presentation, it's about giving people the answer. People generate 3D data for two reasons. They want to answer a problem or they want to ask a question. And that's really what Pointerra allows them to do in a way that's faster, more efficient, and less error prone than the previous very manual process. Thanks, David. So some real world examples. The utility sector is really one of the largest sectors. And, if you think about a business that's geographically dispersed, the asset is a bunch of poles and wires, but they're strung out over 50, 100,000 square miles or square kilometres. It's incredibly expensive to gain insight on the performance of that asset. And of course, when storm events happen or fires happen, bad things happen. People unfortunately die. So one of the reasons that the utility sector is so hot for us and such a great outlook for us is that the problems they're trying to solve are not just mission critical in terms of supporting their business operations, but we're talking about public safety. So these organisations spend millions and millions and millions of dollars a year to try and figure out the state of the network, so they can then spend hundreds of millions of dollars maintaining that network. And the time between capturing the data and getting the answer is really, really important. And that's, we shrink that from weeks and months into hours and days. And when you're generating that sort of value for a customer, you get a very loyal customer, and you get a customer that's happy to go from spending $1,000 a month with you to $50,000 to $100,000 a month. So that's certainly our hot sector at the moment. Thanks, David. More recently, we've got some guys in the US that are really focused on defence, and again, this is the defence sector have come to us and said, we've got a problem. We need a whole bunch of situational awareness solutions for the things that we do, both in the armed forces and in the intelligence sector, and we don't have a quick way to turn data into information. So it's analogous to every sector that we look at. It's just a different type of business model, in this case, defence and in the intelligence community. And all we're doing is squeezing the time from here's my data, give me the answer, and that includes giving that sort of insight to people in the field. A longer burn perhaps on that sort of stuff, but very highly prospective. Thanks, David. And for the mapping sector, the people that generate the data. So a lot of our customers, most of our asset management style customers get their data from a mapping or survey firm, and I used to own one of those organisations, and those firms themselves struggle with the processing and dissemination of data. So as we started with our core data as a service package, we've been able to move back into data processing as well as forward into analytics, and we're making massive gains and for our customers in efficiency and profitability and quality and risk around turning data into information, getting it to their customers quicker. Thanks, David. And more recently in Australia, we've hired a couple of BD and sales guys who are very much focused on solving a whole range of solutions in the mining sector. Obviously commodity prices move around, and that creates the need to drive innovation in the mining space. Certainly, there's some, with the tailings dams issues globally, and moving to a driverless and automated mining fleet situation, the need to get to turn data into information really quickly to support that requirement for growth and efficiency through lower commodity prices has made that mining space really hot for us. Thanks, David. One more. But back to the theme at the start, it's about sales execution. We're long past minimum viable product. Is there a market for your solution? Is there a problem for your technology? Does it work? Will people pay you money? We ticked those boxes a couple of years ago, and this is about aggressive sales growth. So how do we take $5 million US recurring income and turn it into 50? That's really the challenge, and it's about hiring quality people and getting out of their way. There's just one more thing, and that's 3dinsight.ai. some of you'll know that we welcomed a strategic investor to our registry back in July, a guy called Bevan Slattery, really well known on the East Coast, probably one of Australia's best technology entrepreneurs. And you know, Bevan's been fantastic for me at a mentor level, as well as really pushing us to accelerate some of the parts of our business model that we were perhaps going to wait a year or two to get into. And that's certainly trying to create a marketplace for insight. And I won't read all those words there, but 3dinsight.ai, which is the culmination of, or the distillation of our entire business model into, and really sets us, you know, we believe that 3dinsight.ai could be tremendously bigger than any part of our current business, and we don't believe that the market has ascribed any value to you know, to what we could generate here through this marketplace for insight. So I don't know how I'm going on time, but I'll shut up and you can ask some questions.
Thanks, Ian. And I must admit, when we met, it must have been 2017, and you gave me this presentation at a conference. And it
was October 8. It was actually October of last year, David.
And I looked at it and I thought, yeah, I must admit, I thought this is something that is going to take a bit for people to get their head around, but once they do, it'll really take off. And pleasingly for you to see that it has taken off and you've attracted people of the quality of Bevan to your business. So a couple of questions. From a competitor point of view, who do you compete with?
Sure. So there's a ton of competitor technologies for working with 3D data. You know, the people that make the sensor hardware, the mapping firms like, you know, the global GIS and mapping firms like Esri, the global software, geospatial software firms like Autodesk. But those are, most of those platforms solve a part of the problem, but are very much and try and spread themselves really, really wide and do a bunch of things, and incredibly valuable, really high, you know, very technical software that you can really get into, and very much desktop software based if anyone's used it. Whereas our platform is more about process. So it's not about the actual, you know, getting into the very nitty gritty of design. It's about actually squashing workflow. So our you know, there's technology solutions. There's tons of technology solutions for working in 3D data. But the business model that we've built and conceived, which is a subscription model for data processing, data hosting and dissemination and analytics, is really unique. And the best analog I could give you is you know, someone like Nearmap, who came along with a different camera technology that allowed them to think about capturing imagery in a way that the global imagery market hadn't thought about before. But it was their business model that was different. So their subscription model is still somewhat unique, and we've watched them in the US over the past 3 or 4 or 5 years, and you know, there are some enormous mapping companies in the US that have been around for hundreds of years, but they still haven't copied Nearmap's business model. So sometimes in life, it's not about the technology, it's about the business model. And they were certainly the lessons that Rob Newman and Graham Griffiths, two of the Nearmap founders, gave me and our team when we conceived Pointera 5 years ago. Is the technology solution is important, but it's the business model. So to be really direct in answering your question, it's about our business model as well as our technology, and our business model is somewhat unique. I'm not going to say completely unique because how could you ever know, but it is somewhat unique, and it certainly has given us a big moat, and really, you know, I'm sure there'll be some Me Too's, and you know, they're welcome. We'd welcome them because it's a massive marketplace.
Final question: pipeline. How does it look? How's it filled during COVID?
Sure. So, you know, sales pipelines are easy things to speculate about, and they're easy to make look fat because they're not things you have to publish or often get held to account on it, apart from people like me in a board situation with my non-execs. But certainly during COVID, our pipeline has grown, and that said, because our business model is about changing people's business processes, if they're open to change and they want to get on with it, then the sales cycle can be really quite short. But when you're talking about 10 to 15 years of entrenched, inefficient, costly error-prone workflow, and you're trying to change that. You're trying to change people. And a lot of our customers, they're in their 50s, maybe even early 60s, and they've been doing something the same way for a long time. So persistence is required. Well, we have a massive sales pipeline. We've certainly got enough deal opportunities in our pipeline to get us to that 50 million US recurring revenue, but that's the easy bit. The easy bit's identifying them. The hard bit is turning them into dollars, and which goes back to to the point I made before about the success or failure for Pointerra and getting from where we are now in terms of recurring revenue to that 50 million US target that I've talked about a few times, is about getting more and more high quality people that can take those deals, and we've got plenty of them, but to turn them into paying customers. And with the engagement model we've got with our customers who are already on board, we know that works because they keep throwing problems at us. We keep solving them. They spend more money with us. And so it's incredibly sticky. Churn, I'm sure, will be a thing one day, but it's not really something we talk about at the moment, which is unusual for a SaaS business.